So welcome guys, welcome here to another video. My name is Wills FX or Wills or whatever you want to call me. And in today's video, we will be talking about our setup guide and basically how to spot or go through the setup guide and to spot whatever you're looking at, such as divergence, Wyckoff, break of market structure, everything. We're going to be talking about everything and how to spot them in the chart and how to take the setups. Same thing, the bullish and the bearish move. Now, I'll try to keep this video as short, as simple, and concise. So let's jump right into the video. And if you've not subscribed to this channel, please do, because more videos will be related to these and will be released accordingly. So you don't want to miss that out. All right. So great. Now let's jump right into the video and let's start up. So first of all, I want to highlight some things out. Divergence, when I'm looking for divergence, is on the 4-hour. All right. So that means if I want to spot or if I want to go to trade, I want to get into a trade, I'll be looking at the 4 hours divergence mostly the 4 hours divergence. The 1 hour is for schematic. All right. Schematic. Wyckoff, long, short, schematic. Great. Now the 15-minute is for entries. All right. These are the key factors that I consider whenever I look at chart or whenever I want to look for a trade. All right, so now that we understand that the 4-hour is for my divergence, the 1 hour is for schematic, and the 15-minute is for entries, let's jump right into the video. So like I said, I'll keep this video as short, as simple, for better understanding. Now, first of all, the first rule we got for a bullish setup is first spot the end of a bearish movement by divergence. What does that mean? Great. Now we understand that divergence, all right, is the disagreement in price and technical indicators. All right, everything is depicted on the PDF. Let me check that out real quick. Yeah, moving average, confluence, divergence. Yeah, I said is the disagreement between technical indicators, and price action provides a secondary confirmation with regards to our trade. Great. So this PDF is all handed to you. I'll be dropping the link on the description box, so you might want to get it and check these out yourself. So let's jump right into setup. So we understand that divergence is the disagreement in price between the technical indicator and price action. And on our first rule, it said we should spot the end of a bearish move. So remember, we don't trade only off the divergence. We trade the divergence because it helps, okay, it helps spot the end of a movement. That is what the CCI is all about. Now, I'll make a quick drawing. So let's say price was going bearish. Now we understand that the bearish market simply means lower lows, lower highs being created. Now the question traders ask is, how do we understand that this is the last lower low that has been created in price needs to go up? That is a question that is quite difficult to answer, but for me, I've been able to watch the CCI technical indicator enough for me to have some sort of confidence over it. Now, great. So we understand that this is a typical bearish market. Now, how does the CCI help us? Now, when the market is going bearish, our indicator at one point will be obeying the market, keep going bearish, but suddenly, while price action is still bearish, our indicator will start going bullish. Disagreement in price. Okay, so that means that, let me take this out real quick. So that means that when our market is bearish, at some point our indicator is going to turn bullish. That point where our indicator turn bullish is our divergence, is our lookout, because when we get that disagreement in price, we will be looking for a possible reversal, retracement to trade off of, or probably look for price creating a retracement, a lower high, and continue the sell-off to create a new lower low and a retrace to a lower high. Great. So let's jump right into the chart and let's try to spot that out. Remember, this I said that divergence, specifically when we're looking at the 4-hour time frame for divergence. Now, this is Euro USD on the 4-hour time frame, and let's try to check that out. So I'm gonna apply my CCI, and I'll try to spot a trade. Great. Now, on the 4-hour, this is a bearish move, right? This is a bearish move. And we said that we're looking for disagreement in price. There is one. All right. Price created a lower low here. I'll show you that real quick. All right. A lower low. Great. So price was trending. Where is that again? So price is trending bearish, but unfortunately there is a double bottom here. And if you don't know, if you forgot, the double bottom is a retail sign of a possible reversal. Great. So price was trending bearish, but our indicator unfortunately, let me check that real quick. Great. So our indicator suddenly turned bullish here, creating higher lows and high, while our price action was still going down. This is the disagreement we're talking about. All right, though it's not as pronounced as common, but this is what you want to be looking at in price action, because when this happened, it resulted in this move in price, a correction, a minor correction, but a correction still. All right, so let's say you took a trade here and you were selling the market. This could tell you that, okay, you might want to take profit around somewhere here and probably wait for um, the retrace to complete and get in again. All right, we'll be talking about the bearish reversal, so you wouldn't be missing out the trades when you get out of a trade. Great. So now this wasn't exact typical setup, but let's keep going further. Now the market keeps going down, right? It keeps going bearish. Now this is where it gets really interesting. Now remember, the divergence is for spotting the end of a bearish move. Great. Now this is where it gets interesting. The market was trending down. We understand that. But where is the market going to trend and finally end its trending bearish movement? We don't know, but this is what our indicator started doing. All right, when you check this out, this was our last low. Now I can zoom further than this, but you might want to be back testing this, like I said earlier. So this was our last low on our indicator. Now the next that came up, the next low that came on was high, was a low that was slightly higher than the previous low, which was this low. It sort of did this. Sorry, bad drawing. It did this, came down. All right, so it gave us a higher low, right? But as usual, the market was still trending down. Now, this is your typical divergence. All right, this is your typical divergence when the market is trending down, but your indicator is trending up. Disagreement in price. This is your typical divergence. So let's keep going further. Now the market keep trending lower, but you could see this. Your indicator keeps going higher. Not until we finally got this very bullish movement in price action, that price eventually stopped going further lower. Let me check this down real quick. Great. So not until we got this strong bullish candle that the market finally trended high or changed direction. Now I believe that when you go to the lower time frame, there is going to be much more solidification than this. But essentially, we got our first impact of our setup guide, spot the end of a bearish movement by divergence, especially on the 4-hour time frame. Now it happened. Last low, higher low, and the market shifted structure started going bullish. You might want to put up a trend line and say, okay, let's draw a trend line, a bullish trend line, and there we go. And right off from here, great. Low, low, high, high, higher low. So great. Now that we understand that we're looking for disagreement on the 4 hour time frame through divergence, that is our first concept being met. Now you might want to go through this and back test this again, because right up from here you could spot that this is a bearish movement. I'm sorry about that. You could spot that this is a bearish movement, and unfortunately when the market came down further down, we got this low. All right, there we go, a low that is slightly higher than the previous low, which is a higher low. Now the market gave us a lower low on price action. Again, disagreement, bullish trend occurs. Now the market finally springed up and went up. So that is how we look for divergence on the 4 hour and how to spot um, the end of a bearish movement through divergence. Now, there are going to be more videos on the CCI specifically because we got the entry rules, all right? And one of the rules is that we only take trades when the indicator is inside the band, all right? It's inside the band. Don't worry, there's going to be more videos on that. So you might want to keep on, look at on that. Great. So now that we know that we will be spotting our divergence with the CCI, let's jump right into the next setup. And it says that we should what? Observe Wyckoff accumulation. All right. Now, remember, I said the 1 hour is for what? Schematic, right? The 4 hour is for divergence. The 1 hour is for schematic. Now, I'm going to highlight this because this is where price is currently disagreeing right now. Okay. This is divergence, and this is where the whole thing is happening. So I'm gonna jot down to the 1 hour time frame, and we're gonna check more. We're gonna check what this schematic is all about. Great. 1 hour, 1 hour. Where are you? Great. In great. So this is our gray box, and this is where the whole action is all popping up on schematic. So we might want to observe what kind of accumulation schematic. So right off from the bat, you could spot that this is a type 2 schematic. All right. I'm gonna label this real quick. So we've got your selling climax. I'm gonna take this down to 14. Great. So you got your selling climax, SC. You got that AR liquidity, automatic rally. All right. Sorry. Great. Then you get your secondary test, and you got your spring. And what again? You got your test. Now, this is your typical type 2 schematic. What that means is usually the test should come right back and mitigate an OB. All right, I'm gonna put a reaction of POIA. Great, so usually we wanna be looking at price action to do something like this. So come down, and go up, and come down to mitigate an order block here. All right, for a valid test, then probably push higher. But unfortunately, a type 2 schematic is just probably an OT retracement or something like that. So this is typically your Wyckoff scenario. Now, the Wyckoff scenario should suggest bullish or bearish movement, changing operator hands, bullish to bearish, bearish to bullish. Now, something typical again you might want to look out for is your divergence. Remember, whenever divergence is happening, it does happen on all time frame. I'm a swing trader, so usually I'll be looking at divergence on the 4 hour time frame for bigger pips move. Now, yet again, you could see this was a bearish market. Okay, take this. So you could see that this was a bearish market, right? You could see that this was a bearish market going down. Now it gets a little bit more interesting because here this was our last low in our indicator, right? This was our last low before a low that was slightly higher than the previous low came up, which means the market is about to probably shift. Now, when that happens, you could check this out. Great. See that divergence occurred on the 1 hour still. All right. Now, we've got two concepts figured out. Um, we've got spot the end of a bearish move by divergence, and we observing Wyckoff accumulation on the 1 hour time frame. That is two confluence met. All right, two confluence met for us to be ready to take a value trade. Typical setup. All right, so great. Now the third says we want to observe the break of market structure, P and S. Now, there's something about the break of market structure that we need to understand is that this is something you would have to backtest consistently, or it depends on how you view your break of market structure in your own terms. For me, well, this is Wyckoff happening, and this is on the 1 hour. Sometimes I'll observe the break of market structure on the 15 minutes, on the 1 hour, or on the 4 hour. But right now, you're going to see how it's going to make more sense by the end of the analysis. Okay, so this is a break of market structure for me. Break of market structure. All right, because this was a low, right? This was a low, and this was a low high. Now the market broke these low and gave us a new lower low on the 1 hour time frame. All right. Remember, this is Wyckoff. All right. This is Wyckoff. Now the market pushed higher, broke the structure, and came down, but we're failing to break this low. Now we finally pushed higher and we broke this again. Great. Some of you might consider this a valid break of market structure, BMS. Okay. But for me, um, I'll be looking at this as a break of market structure and the retest. All right, the type 2 schematic. All right, great. So if you do not know what break of market structure is, like I said, this PDF depicts a lot, and everything that this setup guide contains is depicted on this PDF. So you might want to go through this and glance more about this. All right, so great. We've observed three. We've observed the bearish movement come to an end. We've observed Wyckoff on the 1 hour. We've observed break of market structure on still the 1 hour. Now let's jump right into the 4 hours. So I'm gonna clean up everything real quick. Remove drawings. So I'm gonna go down to the 4 hour and try to observe a break of market structure same way. Now the break of market structure is not much significant here, but this would be considered my break of market structure, which is quite far. That is why I told you that the 1 hour is for schematic. Yeah, 4 hour is for divergence. 1 hour is for schematic. So great. Now, what will be the next? Now, the next set, we should observe candlestick reaction, specifically rejection. Price rejecting from a previous bullish OB. Great. Very, very, very interesting. Now, a lot of times you might not see the retest of an order block. What does that mean? Reaction of POI. I think this is it. Great. So what that means is, let's say this is a bearish movement. We tapped into a demand. Okay, we tapped into an order block, a bullish order block, and we went further up. And of course, we're expecting price to come back to mitigate, right? Sometimes price might not mitigate and just probably keep pumping higher. It's a type 2 schematic. Yeah, it's a type 2 schematic. Now, don't worry about that. There are entry criteria that will help us catch these entries. But right now, what I want you to understand is that sometimes you might not expect price to come back to mitigate an order block. Sometimes it might happen, sometimes it might not. All right. So that is something to keep at the back of the mind without dragging this much further. So great. Watch a reaction of what was the next setup again? What was it? What was it? Great. Observe candlestick reaction. Now, the candlestick reaction, this is an OB, bullish OB. Of course, we had this engulfing. You could see this here, engulfing. Beautiful confluence. Great. Now we had that engulfing. Now on the firewall we had rejections. All right, rejection. Now on the PDF you understand that wicks. All right, these weeks, these weeks, these weeks, these weeks, these weeks, rejecting of the 50% of this OB is simply a nice reaction off from that bullish OB. Now, you might want to, like I said, back there's this again, you might want to be looking at it specifically, but when you usually see multiple wicks, let me draw that real quick. So let's say this is an OB, and when you see price action creating these wicks, all right, creating wicks, the body failing to close um, above 50% of it, just creating wicks, wicks off of an order block, then it's possibly a sign of rejection, or it is a rejection from another block. So what you might want to do is put your eyes down and probably look at lower time frame for more sniper entries or whatever you want to call it. Great. So we understand that we saw multiple wicks here, which is a sign of rejection, plus an engulfing, and price not closing above 50% of it. So this is a fine confluence. If you want to go through the 1 hour, also you might want to go through that. But on the firewall, we could see multiple confluence. Now, great, let's jump right into the video. Enter at MA cross. Great, now this is where it gets very, very beautiful, interesting. Now, in summary, we're coming to the end of that setup. So in summary, all right, let me show you this real quick. So it says enter at what? Enter at MA cross. Great. Enter at MA cross. Now the MA, you all know, same length, 14, close, no more settings more than this. Now, what that means is when all this is happening, all right, this is where it gets interesting. This is the beauty of confluence. Now, when all this is happening, we only want to get our valid entries when our moving average, all right, is trading above candles or below the candles in a bearish case. What that means? Let's apply the MA. Great. Now, take a note at this. What happened? Now, personally for me, I don't go more than the 1 hour time frame because this is quite familiar to me, all right? This is something I see every day. This is something I trade every day or every time I want to look at trades. Now, the MA cross is quite important. Look what I, excuse me. So look at what happened here. MA cross. MA cross. Look what happened here. MA cross again. All right. Now look what happened here. MA cross. Great. So what I want you to understand is that the MA cross is a beautiful confluence for entries. Now, that means that when price is going bearish, all right, price action is bearish, when our moving average successfully crosses, let me take these off real quick. So it means when our moving average successfully crosses and our candlesticks start trading above, like this one, start trading above our moving average. The first candle that closes, which is this one, we might want to take an entry. All right, we might want to take our entry. Now, this is the 4 hour, right? Don't worry, I'm gonna go down to the 1 hour so you see something magical. Okay, MA cross, target imbalance. See that? Again, we want to get into trades after spotting divergence happening here. Okay, we want to get in when our moving average closes or when the candlestick starts trading above the moving average. Now you might be wondering, okay, the 4 hour was a little bit too long. How am I going to get in? Remember, let's jump right into the 1 hour so you get the schematic entry. Very, very, very nice. All right. Now this is going to be a little bit more sauce now, a lot of sauce. Okay, great. Let's mark that grayish box. Grayish box here. Now I know that I took up everything. It's kind of, spurring, distracting, stuff like that. Great. All right, great. So here we go. Now this is our gray box on the 4 hour time frame, and I said we want to get in at our MA cross. Now look at what happened. Price was trending bearish. Beautiful, bearish, right? Bearish, bearish. Now when you apply the CCI, we've got that bullish sentiment here, bullish divergence, and we've got Wyckoff happening, these whole gray box, right, on the 1 hour time frame. Now, the break of market structure, like I said, occurred here, all right? Now, what are we looking at after the break of market structure? Candlestick reaction, which is wicks that is happening all here, engineered liquidity. Now, after that, we look at what again? All right, enter at MA cross. Now, this is where it gets interesting on the 1 hour. Now, we're talking about entries, right? Great. Now, this is where the, take a look at this candle. It's a bullish candle, and our MA was able to cross it, and candle started trading above it. Now, I wouldn't lie to you, I would have gotten into the trade right above here. Here. All right, right above here, and stop loss, like I said, where's the stop loss again? Stop loss be stop loss above previous. Oh, sorry, this is a typo, and I'm gonna edit that. All right, very sorry about this. But stop loss below previous swing low. So this was our swing low in price action. All right, this was our swing low in price action. All right, now that is where our stop loss is going to be. Great. Now target, like I said, sorry about that. Target, like I said, depending on you, imbalance, FVG, whatever you're looking at to target, equal highs, equal lows, but target is just that. Now, great. Like I said, I would have got in here, here, because this is where the MA crushed. And remember, I said in the band. All right. Trust me, let me show you a secret that I will be putting on the next video. All right, I'll be showing you the rules of entries. Now, let me show you this. When the when the CCI was trending here, see how price was just keep going down. But let me show you something. Let me show you something. Now, eventually, when price action, when the indicator finally crossed, they oversold and got in. This is what happened. Bullish move. Right. Yeah. So we want to get in when CCI is above oversold, and this is happening. Don't worry, I'm gonna be doing more videos on the CCI to grasp more concept on this, but this is just a conference, all right, an agreement conference. So, like I said, get in, all right. You want to get in at the close of the moving average. You want to get in here, get in here, get in here, and price never took out these lows. Beautiful. All right. You want to backtest this? All right. Let me show you something real quick. So this is what the MA can do, so you understand the importance of MA. Look at what happened here. Look at what happened. Closed above, candlestick started trading above, and price went up. Closed um, candlestick closed below the moving average, and price started trending down. Now, what happened here? Closed above again. Here, you would have got in here and held this move. All right. Same thing happening over and over again. Now, I'm gonna jump down to the 15 minutes time frame. All right. Remember, we're looking at here. So let's see if they're going to load previous data. So we could back test this a lot. All right. So let's check previous data. Come on. Now, trust me, this happens on all time frame. This happens on all time frame. Now, let me back to something like see the setup right now. The setup, you want to see the setup? Great. Now, this is the 15 minutes time frame, right? Cool. Now, let's try to get everything. First, we want to check the end of a trend with divergence. Great. This was our last low, and this was a higher low in price. Don't worry, I'm going to be dropping more CCI videos, so you will be understanding there are different types of divergence that occurs on the market from where I've tried to study price action to be. So this is one of them, and this is a disagreement in price. So yeah, this is one of them, and this is what the price action did here. Price came down. Price was trending bearish, right? It was trending bearish, and now we hit this our last low. Let me take that out, right? So price was trending bearish, and we hit our last low here. And the last low that came up, the next low that came up was a low that was slightly higher than the previous low, which suggests possible reversal, right? Now on price action, it gave you a double bottom. W, W's, blah, retail, double bottom or whatever. Great. So price gave us that, and price finally started moving upward. Now entries inside the band, inside the band, and let's get another confluence. Let's add our MA. Bam. Price crossed here. All right. Now this would have been our entry again. Entered here. Stop loss structure. You want to scalp? Take it up above or higher or imbalance or whatever you're targeting. That would have been a beautiful TP trade. All right, beautiful TP trade. Great. So let's jump right into uh, setup that we were talking about. So you see 15 minutes entry. Great. So we finally got this now. So this is the 15 minutes time frame. All right. This is the 15 minutes time frame that I want to be looking at my entries. And this is quite beautiful because on the 15 minutes time frame, the schematic was really beautiful. It was a beautiful breakup market structure, and everything was quite on precise. And it was a beautiful type 1 schematic on the 15 minutes time frame. Now I'll break that down real quick. So arrows spot the end of a bearish movement through divergence, right? This is a bearish movement. Now let's try to get what CCI is going to say about that. Now, here the disagreement started, and price started ranging. You might want to call this a minor because this looks like a double bottom. Yep, double bottom. Can zoom in. So I want to call this a minor W or divergence, but essentially it's a disagreement in price, right? Great. Now, this is divergence. All right. Already, it's already happening on the 4 hours. So you might want to be looking at that also. Now, on the 15 minutes, it's quite beautiful. Now, this is entry criteria. Don't worry. Like I said, the video will be coming up. And this was a beautiful retest, OB retest. Remember, here, break of market structure, observe candlestick reaction, rejecting from previous OB, Wyckoff schematic, and all that stuff. So this was a beautiful retest and a reaction. Price came back to retest the other block, and we shut up. And if you look closely, the other block was an engulfing again, an engulfing again. All right. Now let's get our entry criteria. I'm gonna hide this real quick. Let's get our entry criteria and let's add our MA cross. Beautiful. This should have been our trade entry here. All right. And imbalance. All right. Let's target maybe a little. See, it's a beautiful risk to reward. I mean, check this out. Just following the principle concept of it, it's quite beautiful. Price going down on a bearish move. All right. Then we just have to wait for the indicator to start disagreeing with price, for price to make that shift in market structure after this already happened. All right. And we're going to start going bullish. Then if you want to get extra confidence, you might want to wait for the MA to keep tapping and eventually crosses this. All right. Ring. All right. So this is my MA and the red is my price action. So at this junction where price crosses, right, at that junction is our entry. It's quite beautiful. It happens in all time frame. It happens every time. It happens every day. It happens with whatever pair you're looking at. All right. Now, I said I'm gonna keep this video real concise and short. So that was you want to backtest this again. Check this out. Divergence happening here. Okay, happening here. MA crossed here. You got selling climax, secondary tests, spring test, whatever, entry and price keep going high. Divergence spotted. All right. Reaction, candlestick reaction, rejections. All right. So if you follow this concept and you follow this guide vividly, you're going to be having a lot more win rate than the loss rate because this is a typical setup. All right. So that is it for the the bullish move. Now the bearish move, like I said, same thing, spot the end of a bullish movement by divergence, observe wake up distribution, observe bearish break of market structure, candlestick reaction, enemy cross, and the opposite of all that. So let's see what pair I don't trade much. Euro CHF. All right, I don't even know what this pair is doing, whatever it is. So let's jump right into the 4 hour time frame and let's try to backtest this sell-off. Now I don't know what this pair is doing, but let's try to see something. Okay, so Okay, great, 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 great. Now, without looking at the indicator, I could tell that there was a bullish divergence here, and there was a bearish one here. And I believe the MA would cross around somewhere here and start trending and start doing a sort of bullshit. Yeah, something like that. That is my understanding towards the market. Now let's look for bearish. Bearish. Now, first I want to spot the end of a bullish movement. And where is the bullish movement in price? This is the bullish move. We're trending higher, 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 higher. Keep going high. All right. So let's hook up on our indicator and see. Great. Now this was a bullish move, right? This was a bullish move that kept going high. But remember, this is a divergence. You all know bullish divergence now. Now, same thing with the bullish move. We expecting a bearish. See that? A bearish. Now, the bearish simply means, I mean, jot down through drawing. Price keeps going higher. On okay. So this is price action keep going higher. While indicator keeps going higher, but unfortunately starts going lower, or price is going higher. All right. Price already happened. The shift in market structure to the downside already happened, but price action keeps going high until finally price is going to do something like this. So that means disagreements, one, Y curve distribution, two, and probably the MA is going to be around somewhere here. Yeah, it happens all the time. This is something you're going to backtest, like I have been saying. So, and those of you who've been on my group chat, you've definitely seen this a lot, a lot. Like I mean a lot, a lot. Typical setup, typical. Great. So now that we know that we're looking at disagreement in price action for bearish sign to the downside, let's try to see what we can get. Now, this is what happens. Price made this disagreement here, while price kept going higher. Now, when price eventually created this high, we came down, but we're failing to break higher. All right, we're failing to break higher, which suggests that there is a shift. Suggests that the market structure could probably go down through, knowing that our divergence is happening. All right, divergence. It's telling us that we could see lower prices. All right, great. All right, so next we'll be looking at distribution. Now, I'm not going to label that. You all know distribution schematic. Selling time, buying climax, automatic rally, UTAD. Okay, you might want to call this test. Okay, test, break up market structure to the downside, goes up and price start going down. Now I'm not going to elaborate into that further. The PDF is there. You might want to back this and test this a lot. So this is the distribution going on right now. Remember, this is a 4-hour time frame. Now, when you go down to the lower time frame, such as the 1 hour, I believe you're going to get more detailed schematic happening right there. Okay, I'm not going to jump down into the lower time frame for time's sake, so we could back test more. Now, two confluence met, disagreement, and a distribution and a breakup market structure, which I believe happened right here. Now, remember, my breakup market structure might be slightly different to every other trader. So I might be looking at the previous swing high that was responsible for a new swing low. Well, it all depends on what you see and what you do. But for me, this is what I will be looking at. On the lower time frame, such as the 1 hour, there was a breakup market structure here. The market came down, broke down, and we went up. We failed to break higher, and we had a candlestick reaction with this wick. This week's one, this week's two, probably this retest here, rejection. All right, not acceptance. If it were going to be acceptance, it would have probably blown past this. Now, 2 weeks rejection or multiple weeks rejection suggests that price is not going to blow past and probably head down for a correction. Remember, we got an imbalance below. All right, an imbalance suggests that we could definitely see lower prices in than action and whatever that price wants to do, maybe probably down below. Blah. Great. Now, what we got observed breakup market structure, good candlestick reaction, rejection, of course, that is happening here, week 1, week 2, and all that shit. Sorry about my language. Okay. Now, great. Now enter at MA cross again. Enter at MA cross. All right. We got divergence here. We got another divergence here. All right. More videos will be coming on the divergence. Now, I'm not gonna cheat. All right. I'm not gonna cheat. This is I've understood a lot about the MA cross to probably kind of predict where it's going to cross. So I believe the MA is going to do something similar to this. This is my understanding of the market. So it's going to be doing something similar to this, going up and bam and bam and going down, crossing. Yeah, something like this if I shouldn't be wrong. Great. So let's try to get an MA crossing and I'm going to apply that. Oh, almost. Yeah, almost. Yeah, basically almost. All right, so let me take up my unmade MA or whatever. Yeah, great. So this is on the 4 hour, remember, right? This is on the 4 hour. So if you or if we had entered probably at the snipe of this and put a stop loss below here, sorry, above previous swing high, and take profit. All right, let's not be greedy. Imbalance here. We would be floating. I believe we would have snapped TP. Great. We would have snapped TP. All right. Now, this is on the 4 hour, right? Oh, great. Sorry, I had to remove that indicator. Shit. Oh, great. So I kind of, all right, let's try to see. Okay. So let's try to jump down into the 1 hour time frame and remember it happened here. So I'm looking at here. 1 hour. All right, this is the 1 hour time frame. Whoa, the retail heads and shoulders quite prominent here, right here for one. Great. Now this is the 1 hour time frame, and you could see this is a beautiful breakup market structure here. Like I said, 4 hour for divergence, 1 hour for schematic, 15 minutes for entries. Okay, so you could see what I see now. So this is the breakup market structure to the downside, and you could see that price tried to go higher but failed and broke the structure again, switching to a bearish market, low lows, low highs. Now, great. So let's try to understand again. Let's apply our divergence. Now, the divergence already started happening around somewhere around here, but it's too long, right? It's too long. I want to look at the closed divergence. And where is the closed divergence? It happened here. All right, close one here. All right, here, shifting market structure. Now let's try to let's apply an MA and see what's going to happen. Great, great, great. Here we'll go. And boom. Let's try to see what's directs to reward is. On the 1 hour time frame, 32 pips, 33, yeah, 32 pips. Yep, but as you can see, price never even got up to that. It just kept bleeding and kept bleeding. So let's go further down again. All right. Let's try to take this out to green. Let's go to the 15 minutes time frame and let us point out the same thing over, and let's try to see what magic it's going to play out. Okay, so this is taking a little bit longer. Whew. Sheesh. Back test, back test, back test, back test, back testing. All right, great. I was going to give up a little while ago because this is taking long, but yeah, we are great, 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 great. Let's pop on the CCI and try to understand again. Bullish move, okay, 15 minutes time frame. Bullish move, okay. Now, end of a bullish move divergence. See, that happened here. High, a high that is lower than the previous high, so gives us what? Low high. All right. Enter trade in the band. All right. MA crosses here. All right. Bearish divergence on the 4-hour time frame. Candlestick reaction. Those all happened. Now, this time, let's try to see what our extra reward is going to be like. So I believe we know this would have been our entry, stop loss here. And this is going to be our extra reward. How does it look like now? 15 pips, which if we had gotten in would have been a no drawdown in instant blues. Probably go down farther. So great. So that is how we look at, and that is typically my setup preview. Every day when I come to the chart, this is what I look at. This is what I want to be looking for. And unless this happens, I'm not going to be looking to take any trade. All right. So does it happen on indices? Well, let's see. Let's see. I'm currently on Bitcoin trade. So, all right, let's try exotic pairs. Let's see. So you all know what we'll be looking at. So I'll try to just backtest this strategy real quick, and we'll try to end this video. So great. Now, right off from this spot, I could spot a couple of divergence here. There is a divergence here, and there is an MA cross around probably somewhere here for entry. Okay. Now don't look at me like I'm playing some magic. This is what I've been looking at for a couple of months or weeks now, whatever. Now I believe there is another here. Great. Another here. And there is another MA cross here. Another one. If this should be coming down, this should cross on somewhere here. All right. Yep. So divergence MA, and let's try to apply the MA first. Great. So I was right at here. I was right at here. I wasn't right at here, not much. Almost right at here and quite right at here. That is because I look for the buys more often than the sells. Now, quick study at price action on the 4-hour. Let's try to apply that divergence and see the magic. Great. Like I said, there was a divergence here, which of course you could see here. There was another here, right, which you could see here. There was another here, trade inside the band. All right. And here you could see another here, all right, here, disagreement. Now you're looking at another here. So what do you think? We just want price to do something like this. All right, let me clean up that real quick so you understand. Remove drawings and take off. Now, my understanding to this is right now, you will be looking at the end of a bearish movement here, something like this. Now, the CCI is going to probably do something like this, coming, and when it gets in the band, or when a candlestick closes in the band, yeah, I will be looking for the buys. And I won't be selling not until I get a bearish divergence for sales. And yep, this is my typical trade. Calm down and keep playing ping pong. All right. Now, if you can be able to read the CCI like this, you would basically understand what this oscillator price action is. All right. Now, some of your, or some will say, nah, indicator, blah, blah, or stuff like that. This is my confidence. This is what I tend to look at. All right. Now, let me check this out. Let's go to the 1 hour time frame and probably pick a trade. And here we go. Reaction of POI. Great. Reaction of POI. I'm gonna change this to gray to lead on the 1 hour. All right. So what would I be looking for? I'm gonna put on that MA. Great. So I won't be looking for buys right now. All right. I wouldn't be looking for buys because right now the CCI is just ranging. Is just ranging. The move that is going to be responsible for this range is the bullish move. All right, is the bullish move. It has not yet completed its mission to come to an oversold and retrace back. So right now, if you got big accounts, you might want to take a trade around here, looking at some mitigation around here. But personally, I would want the trade to come down to mitigate here. And also, I would want my MA to cross and let's trade above it. Okay. Yep. So that's what I will be looking for on Mexican USD Mexican. Is that a pay? Yeah, that's exactly pay. So great. Let's try to check another pair again. All right, let's check in indices and let's try to see what NAS is doing. NAS. Yeah, NAS is okay. All right. Check this. Let's go to the 4 hour. Ho ho ho. Great. We got engineered liquidity here, equal highs. You want to call it that. We got OB to be mitigated here. Beautiful. So we've got target zones, right? We've got target zones. Bullish movements can be found. This is a bullish movement. So cool. Cool. All right. So what we're looking at. Great. Great and great and great. What I mean by great is we could be expecting some bearish movement in price action mainly because of this. All right, mainly because of that. So what I will be looking for is for my indicator to start dangling down. And when it finally crosses above this, starts trending below this band, probably around an entry around here. And my MA is willing to cross um, below the candlestick. Of course, I'll be looking for the sell-off. Okay, right now we've got that early warning. All right, the early warning that price could probably trend down. Remember, early warnings here led to price tagging a little bit. All right, great. Now let's jump down to the 1 hour and probably snatch more insight. Great. On the 1 hour time frame, we'll bearish. We could see this real popping. Bearish, bearish, imbalance target. Probably something like this. Yeah, that could possibly be the case, you know. That could probably be one. All right. So divergence is present. Now let's try to get something. Let's try to get something. Great. So we've got an M cross here. E. All right. We've got an M cross. Now you might be wondering, this is a live market. Remember, you might be wondering, okay, what to do now, right now that price is not even close to my 1 hour MA to trade above it. What am I going to do? Well, let's pop right into the 15 minutes time frame. Oh, great. We're having a golfing. Great. Great, 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 great. What I mean by great is great, great, great. So I'm gonna check this chart in the morning when I get up. This is Asian session, which I don't trade much, but damn, I'm not gonna be looking at this. Woo! Session high, session high. So I'm gonna take a screenshot of this right now. Great. So this is a typical trade scenario and typical trade setup that I will be willing to engage. All right. This is a typical setup that I will be willing to engage. Now, this is something you might want to be back testing every day. I must jot down the rules again so you would understand. First of all, divergence is on the 4 hours. I want to observe that on the 4 hour time frame. The 1H is for schematic, and the 15M, okay, is for entries. Entries. All right. Now, I'm going to be doing a separate video about the CCI and its rules because there are some technical rules that needs to be obeyed on the CCI that could give us valid more entries and beautiful trade setups. So I will be doing that. Now, this is this video, you need to backtest this a lot. You need to study this in order to see what I see in price action. I think I'm going to be looking to sell that market. Should I sell this market? I don't know. Let's try to look at that. So you might want to be back testing these a lot to see what I see, and it's gonna be fun. All right. Okay, great. So I'm in the trade. I'm in the trade stop loss very, very tight. 13,982.83. 13,982.982.3. Great. So I'm in this trade right now, and the reason is because, well, this is kind of a reaction, all right? This should crash down, in my opinion, because if I go to the 5 minutes, it's already trading. Yeah, it's already crossing above this. So that will be all for today. That will be all for this morning. You might want to backtest this video a lot to know the specific things that are interesting. Remember, 4 hours is for divergence, 1 hour is for schematic. 15 minutes is for entries, right? Remember, oh, we snapped TP on GU. Yeah, I send the signal out on the group chat. So we're going to run this back test real quick. So yeah, let me see GU 15 minutes. All right, I think GU 15 minutes it's beautiful for a sell-off. Yeah, GU, great. 5. So, yeah, so I'm gonna break down what I saw in GU in yesterday trade. So, same thing, quite typical on the 4 hour. I don't think there was much. Yeah, divergence already happened and price was currently in the band. Now, there was not much detailed info on the 4 hour, but on the 1 hour time frame, this is really getting really interesting. Now, you could definitely see that this low was cleared, which was quite beautiful, not a bearish break of market structure, but just a stop hunt. How do you know a stop hunt? You want to shift to the line charts and you want to look at the previous low. All right, there it is. These lows was not broken by this. So um, it was not a break of market structure to the downside. It was a stop hunt. Now we've got some significant equal highs above, and after stop hunting that, it was quite obvious that we were having this divergence. All right, that was what got me fired up. And also, E was also having the same thing as cat JPY, and I was just looking at that. Now, when it got to the 15 minutes time frame, damn, this got very interesting. This got very interesting. You could see that there was a crossover here, and I took the trade. All right, took the trade, and also don't forget in the band, in the band. Now, let me show you all a little bit quick something very beautiful. Whenever price gets in the band, or whenever price crosses the first MA, oh sorry, when the MA crosses the when a candlestick closes above the MA, the first one, the second one, probably the first one, you might want to put a line towards it and study what place it's at on the CCI. You're going to probably see something like this in the band. Yeah, in the band. I can't zoom more than this, so you might want to go through this and back test this. So study and probably you might understand why I'm going to sell this market or selling this market right now because well divergence, MA, cross, and all that. So bam 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 bam. Great. Now that will be all for today's breakdown of this concept. You might want to be looking at this, you might want to study this very well, you might want to backtest this, everything that I just spoke upon, OBs, confluence, divergence, settings, distribution, accumulation, calls, order blocks, reaction, liquidity, basically everything that I trade is depicted on this PDF. So study, backtest, and enjoy and have a trading plan because I believe something. The setup is something that after you've gotten a setup, you also need to execute it multiple times. And from there, you would be able to derive how you trade and basically just have a setup. When you get a setup, you know, if this is all you trade, RTO, RTO, as long as you can master this, you can trade whatever you want to trade. Okay. Same thing. Okay. Same thing. All right. So that'll be all, and do have a wonderful day. Now remember, try to subscribe to the channel if you got more or you had something up from this video. Hit the subscribe channel, hit the notification bell, because the next video I will be doing is specifically the CCI and what you will be expecting. Well, let me show you real quick. This is what you will be expecting. Let me show you real quick. Great. So what you will be looking at or what you will be expecting is the entries, all right? The entries. And these entries, they have confluence. What do I mean? You understand this. You understand these entries, okay? That is technically what you will be looking at. So great. I'll be shutting down the Zoom call right now. So catch you on the next video.